JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 12th of the 12th, 2022. So yeah, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can check out for more information about us, guys. So, right, now then, let's jump into the charts. Apologies for the absence of the video on Friday, guys. Had a few technical issues, but hopefully kind of back on track. But yeah, basically Nikkei. First thing what I want to do here is, because I already talked a lot about this, and the first thing I want to do is actually remove all the drawings here. Because why? Because let's start fresh. First of all, first thing what we can see here is that the 200 EMA kind of is on the has flattened a little bit, and well, actually it's a little bit on a wavy side, but not with a direct trend as let's here in the past. So basically, since from around August of last year, we have been kind of oscillating around that 200-day EMA overall, yes. And at the moment, I think we're kind of going closer into something like a coiling up scenario. So let me just show you what I'm talking about here. So if we take a look at the bigger picture, you can see that we have this downside trend line taken from the high of the highest point of September of 2021, and we have this other upside support line taken from the low of the lowest point of March of this year. So in other words, we're kind of coiling up here, and we're still continuing to oscillate around that 200-day EMA. So in other words, if you do see, for example, or if we do see a huge drop below the 200-day EMA, yes, we could go lower, but I wouldn't class it as a huge drastic move yet, because it might just kind of drift here a little bit lower, maybe you end up testing this upside line, and then rebounding and pushing back to the upside. So long story short, that if we look at the bigger picture, then we can see something like this basically. But from the shorter term perspective, of course, the fact that we are trading right now, or at least trying to move back above all of the EMAs here on our daily chart, that's of course a positive, which could lead to some higher levels, of course, and looking at even ignoring all the levels just in general for now, just let's say the fact that if it continues to trade above the 21-day EMA here, because it's already above the 100 and the 200-day EMAs, if it pushes further above this 21-day EMA, then we of course could start aiming for this upper side of this downside or this triangle kind of ish, I would say, because it's not really like a beautiful triangle yet, but let's put it this way: we can aim for this downside line, and then we could take it from there. Now, if we take a look at the lines here, so for example, the 28,502 zone, this could be an interesting target. That's the highest point of November, and actually also, let's say, would be very close to this downside line, which we could test out. So look, everything could play out perfectly here for the bulls if we continue to trade above this 21-day EMA. If we start falling below the 200-day EMA, because this is going to be from where I'm going to aim for the downside. Now that's this is where a few more sellers could join in, and then we could start maybe looking at levels like here, like the 26,237. I get it, it's a lot. In the meantime, I mean, we could, you know, end up testing somewhere areas like here, like the 26,870, something like that. Yeah, again, like I said, the simple way of looking at Nikkei at this point in time, I think it's the way I just mentioned. So if we continue to trade above the 21-day EMA right here, I will go higher towards this downside line. If we fall below the 200-day EMA and stay below it, I'll go lower. Shanghai Composite very quickly on Dow, and this one's drifting lower. And look at this. I mean, the 200-day EMA is doing its job, providing good resistance. I talked about this last week, and basically I said that if we if we manage to push above and stay above this 200-day EMA, great, I will go higher. But as you can see here, this is what's happening right now. We are drifting lower, and well, we're having this nice correction here to the downside. If you don't feel comfortable with, let's say, trying to capture it here, because look, don't get me wrong, it could drift a little bit lower. Maybe we could be aiming for this 100, you know, 100-day EMA, shown as the green line, or maybe the 21-day EMA. Good potential targets. These are the ones that I'm aiming for, as long as we stay below the 200-day EMA. But to be honest, I mean, here at this point, I mean, it probably was a good idea to maybe try to risk it here somewhere, like for a little short here. But if you didn't do that, I would say, look, I would suggest maybe leaving it. Just okay. I mean, look, if you do allow yourself, if your risk tolerance does allow you, and your balance allows you to, you know, to go and gamble here a little bit, okay, you can do that. However, just don't go crazy. You know, just keep your stop losses in place, because look, accept the fact that it might drift like a little bit lower here, you know, test this area somewhere, maybe even actually test this little hurdle, this inside swing high of the 2nd of December near the 3,171. Test it, rebound it back up, and then maybe, you know, like later on it could go to the downside again. So that's why whenever I see something like this, I don't really like it. I mean, if I missed it, I missed it. That's fine. I'll wait for something else, because that's why, for example, my downside scenario is from around here somewhere. So I would like to see this one drifting lower, maybe testing this area, maybe bouncing around here a little bit, and eventually maybe breaking this upside line. However, that's in terms of the downside scenario. In terms of the upside scenario, pretty straightforward. A push above the 200-day EMA is required. NASDAQ 100. So, look, I talked about this last week, and I said that, hey, maybe we have ourselves here is a broadening triangle pattern. So, now, the reason I'm drawing my arrow here this way is that, let's say, because we're very close to the lower side of the broadening triangle, if we do break the lower side of it, we could go lower. We could test this upside line taken from the low of the 13th of October. If it holds, great. We could see a rebound like that, and, you know, a move back to the upside. So this is my kind of scenario here. If we do break the lower side of the broadening triangle here, if we break the upside line after that, okay, ignore this whole, you know, this whole thing, and we could, you know, start aiming lower here, and so on and so on. So. But at this point in time, guys, I mean, like I said, I'm keeping an eye on this. I'm not really very positive yet, so I will probably start looking at some higher levels inside this broadening triangle if we do push above the 100-day EMA. If we do so, great. I'll aim for the upper side of the of this formation. So this highlighted territory, I think it has to go somewhere around here. Yep, there we go. That's a little bit better. This could be a nice good target, but again, I'll get to that point, the psychological 12,000 mark, but I'll get to that point if we do push above the 100-day EMA. S&P 500. So this one's a little bit tricky. Look, we violated the lower side of the rising channel, which is fine. That's okay, and I think that it's time to kind of get rid of it, because I think it's no longer valid. One thing that I will keep an eye on here is. Some of you might say maybe, hey, this is maybe like a head and shoulders pattern. Yes, could be, but not a very attractive one, to be honest. So I'm try, and not even a complex head and shoulders, to be honest. I think it's just yeah, it could be like a complex, maybe double, but again, it's not really. Look, I will consider this as a head and shoulders pattern. For example, if we right now rebound from this area, push higher, test the 200-day EMA, struggle to overcome it, move back down, form another, because look, we have two shoulders here on the left, and we're missing kind of two shoulders on the right as well. So that's why with the whole idea of the complex head and shoulders, yes, could be. We can consider that, but way too many things have to happen in order to, to kind of have that. But of course, we'll consider it. Of course, we consider everything. Everything's possible. But if we somehow push and stay above this 4,029 territory right here, above this 200-day EMA, well, maybe actually I'm going to skip the whole kind of complex head and shoulders pattern and move higher. In terms of the downside, look, it might not even do the head and shoulders thing. I mean, it could just break this area straight away and move lower. And if it does that, if it falls below this 3,911, 12 territory, somewhere around here, I'll probably stick to the downside and I'll aim lower. One thing that I need to draw here for sure is this. Now, this has been violated already, of course, but could be still quite interesting. Because look, at the moment, yes, everything's kind of leaning a little bit more towards the downside. But if we start popping back above this 200-day EMA, we could end up testing this upside line from underneath, and then of course eventually we'll then get rid of it, because then it will be irrelevant. And but just out of curiosity, I want to leave this for now and see if we actually gonna if this is gonna end up being like the whole textbook scenario where we could see a drift lower here, and if we could see further move south. Now the German index DAX. Okay. With this one here, it's a little bit interesting. Also kind of similar, we're kind of following this. It's kind of following the U.S. indices as well, but also at the same time, depending on it seems like it has its own mood. Like it has this kind of, hey, I'm gonna follow the herd, but actually, I'll just step out for a few, for a coffee or something, like just on the side. So it's kind of doing similar stuff, but not. So that's why it requires a separate very individual approach. Look, I've drawn this Fibonacci here, hoping maybe to see a larger correction here to the downside towards that 23.6, and still I am kind of hoping to see that correction towards that 23.6, because that 23.6 looks fantastic here together with the highest point of August of this year, and I mean they're coinciding just beautifully. So if you are looking for some lower levels, I think that the best option right now is, now previously I talked about this 14,150, but I think that now we need to raise this a little bit and mark the 14,200 zone approximately around here. If we fall below the 21-day EMA and this hurdle, I will aim for that 23.6% retracement on the Fibonacci. For the upside, pretty straightforward. My conservatism here is very, very high, and I'm gonna wait for a pop above the 14,572 territory in order to go higher. DXY, the dollar index. So here I think it's time. Actually, I think we can get rid of all this stuff here, this downside line. It's kind of a little bit in the way, this highlighted zone as well. I'm gonna keep on the lines. I'm just gonna redraw a few of those, because I think it's this way it could be a little bit better. So if we do drop lower, And if we do want to go lower, then we need to wait for a drop below this 104.11, just to be out of like, just to be a little bit more on the safe side, because a nice good drop below this hurdle would confirm a forthcoming lower low and potentially could open the door towards that 101.30 zone. For the upside, pretty straightforward. The same analysis is valid. I need to see a push above this downside line actually, because at the same time we would be placed above the 200-day EMA and the 21-day EMA. Now jumping into gold very quickly. Gold, look, this one is very, very interesting. So previously I talked about this and I said that if we pop over the 1786 territory, yes, I will go higher. And we did go higher, but we found resistance near this 1808. Close to that level. This level is the highest point of August of this year. So look, if we continue to trade above this 1786, I will continue aiming to the upside. So I'll class this little move lower here today as a little correction, as a temporary correction before another possible leg of buying. And then we could aim for the upper side of the of this rising channel pattern, because it seems like currently we are in it, so let's stick to it. And at the moment we're just kind of near midpoint of that channel, so hey, maybe we could hope for a bit of a rebound here. If we do fall below the 1786 and stay below it, I'll aim for the 200-day EMA again and this lower side of the rising channel. WTI oil, yeah, this one's still drifting lower. To be honest, I'm not gonna say anything here, because look, I'm still to the downside. I'm still aiming lower as long as we stay below the 73.62 territory. If we continue to trade below it, then yes, I will aim for the 66.15 level right here. For the upside, I need to see a push above this downside line here in order to go higher. And look, previously I talked about this 82.10. I'm still keeping an eye on it, but I think I will start looking at some higher levels already if we do push above this downside line. Bitcoin. So yeah, I talked about this last week, guys, and look, I mean, the same kind of analysis is valid, and look how well this downside line is providing resistance. I've drawn this. This one's taken from the high of the 28th of March of last year. So, sorry, last year. This year. So, in a way, even if it gets broken, this downside line, we have another tentative downside line which could play out as well. So look, at the moment it's not very exciting here. Of course, it could, if it breaks this downside line, the first one, the steeper one, great, I'll aim for the other one. Around here we have the 100-day EMA, but if it struggles with that one, then we could see a drift back down. So that's why, unless we start clearing both of these trend lines, then maybe this is where some more action could come in, for the buyers. And maybe if we could start clearing this level here as well, the 21,479, and probably by the time this could travel, let's say, to the upside, the 200-day EMA would be around here somewhere. And if that gets cleared, well, guess what? This could open the door towards higher levels. EURUSD, guys. So this one's look, I talked about this and I previously mentioned this. So if we are looking for some higher levels, then certainly a push above the 0.6798 territory is required. We could aim for this 200-day EMA. Then if that gets cleared, then my next target is the 0.6916. Still the same analysis is valid. At the moment, like I said, I'm keeping an eye on the 0.6798 level. If we clear it, I'll go higher. For the downside, I need to see a drop actually below all of the EMAs first, and then I will consider a move, a bit of a retracement here to the downside. AUDCH chef, still the same analysis is valid. We're still stuck in the range here. We're closer to the lower side of the range, and also the fact that we are, struggling with this 21-day EMA right now, of course, gives us a bit of a, a moment here for some downside potential move. It could open up, a move here for the downside. So, in other words, we have to wait. I mean, unless you like to trade ranges, go ahead, guys, but just have your stop loss in place, in case this, let's say, starts breaking through one of the sides here. But if you don't, if you want to wait for a breakout, then you know, I think that's it's a good option to do so as well. So just kind of yeah, at the moment I'm watching these sides of the range here. So if we do clear one of those, then yes, I will go. I'll consider the next short-term directional move. And ZCAD, look at this one. I mean, this is just fantastic. I mean, look how far we have moved away from that 200-day EMA. And I can't remember, like last time it was something around here. Yeah, probably that was March 2020. That was the last time. Okay. So yeah, I mean, if we talk about from here to here, okay, roughly, roughly back in March, and I think it's this one here, this point here as well, October 2018. In general, I mean, this has been quite a move, quite a decent move, I would say, away from this 208 EMA. And to be honest, I'm kind of hoping to see this one coming back a little bit. And I'm not saying it, you know, it could be right now, but we are, let's say, very close to some of these key resistance barriers, first of all. So if you're looking for some higher levels, then I would say maybe wait for a bit of a retracement and then kind of go back in, because look, I mean, it seems like clearly that the trend is changing. And because if we take a look at this picture here, let's say we draw a trend line from here to here, we can see that we broke this trend line. So great, I would say great for the bulls, you know. So, but whenever we do break a trend line, if you remember, you have watched my videos a lot of times already, so you know that I always put an emphasis on the fact that after we break a trend line, we kind of come back and test it either from above or from underneath, depending on the trend line, and then depending on the direction of the breakout. So in this case, I think that there is a possibility for this one to drift back down and test this downside line from above. And at the same time, maybe the 200-day EMA could approach this area, and you know, it could be double support here, and then we could see, you know, a nice rebound and a push back up. Now, my only issue right now is the fact that we are very close to these two key barriers, these two key resistance barriers, and will we end up testing those? I don't know. I mean, we're very close to them. I would like to see a good test here, maybe a good rejection, you know, maybe even a false breakout or something like that, and then, you know, a drift back down. So this could be a good indication of a possible reversal. At this point, yes, we're reversing lower, but it might be just a little temporary correction before another further move north. So long story short, this could be an interesting one for the short later on, but at the moment, I'm trying to figure out, you know, from where we will start considering that move lower. But certainly, I will pick up on this for sure. USD CAD, this one we're stalling. Yeah, we're stalling here. We're stuck in this little range between the 1.3571 and the 1.3685 levels. So, in other words, if you're looking for some higher levels, then certainly yes, wait for a pop above this barrier right here, the 1.3685. If we do get that, then yes, my next target is the 1.3808. For the downside, I need to see a break of this upside line, and then I will go lower. USD CHF. So this one, look, so far so good. I would say it's kind of working out as that nice little kind of falling wedge pattern. I'm not, of course, according to all the TA rules, these tend to break to the upside, but we have seen this, working in the opposite way as well. Because look, I mean, we have our pole, and we have something like a, like a flag-ish kind of, like a pennant more. Sorry, not a flag, but a pennant. So if that's the case, then we could see a continuation move lower. But at the same time, it's a conflicting scenario here. Maybe actually it is a rising wedge. Well, the way you can play this out is, let's say, if we see a nice rebound and a push higher, and we move towards the upper side of this formation. If we start breaking the upper side of this formation, that's wonderful. Then we could start considering maybe a bit of a move to the upside. And I'm not saying that I'm going to be like very radical here and I'm going to go higher. No, I'm just going to aim for that 200-day EMA initially, because what could happen is something like this, where we could, get a hold up around here, and then if it struggles, maybe this is where it is going to form a possible flag here, and then we could see a decline further on. So keep that in mind, guys. But at the moment, from the shorter term perspective, certainly if we do break the upper side of this formation, then I will go a little bit more to the upside. Now, GBP USD. This one, I'm still watching. My favorite pattern here is the rising wedge. I'm not saying that this is, this will end up being a rising wedge. Surely for now it seems like one. But if we start breaking the upper side of this pattern, then yes, I'll say ignore the whole thing, ignore the whole, the whole pattern, and let's start aiming to the upside towards further higher levels. And then, yeah, we could aim for that 1.2667, and then we will take it from there. For the downside, I would like to see a break of the lower side of the rising wedge here, and then consider a move to the downside here. So keep that in mind. GBP/NZD, look, this one is fantastic. I mean, I think it's a very nice formation here, and a bearish formation. But so far we are struggling with these two hurdles here. So we need a clear break at least below this 1.91 territory in order to go lower. We need to see the pair staying below it in order to get excited with further declines. By further declines, I mean aiming for that 1.876213, approximately around here, this area, this territory, and then we'll take it from there. For the upside, well, I would like to see a break of this downside line first, and then we could aim for this level that I looked at previously as a good barrier for the upside. Yes, it could still be a good barrier for the upside, but certainly first we need to see a break of this downside line. GBP CAD. Now this one I talked a lot, and look, I mean, we're still holding near this barrier, near this 1.6717. We did violate it on Friday, but look at today, we're drifting back below it. So I would say this is a good target to watch. Currently we're declining. Certainly some of the bears here are already hoping to see some sort of action here to the downside, but question, can we get that? Well, I would say yes, we could, but again, I need to see that some sort of better confirmation, and to be honest, I'm at the moment, although as much as I would like to see this one traveling to the downside, I'm still not excluding the fact that there could be some more upside left in this, and we could see more upside towards the 1.6950 zone here, and well, roughly around here, to be honest. I mean, it's not exactly the level, but this area could be a nice target if we do push back above the 1.6717. EURUSD. Now this one's also interesting, but this one's a little bit more promising because look, we have been violating this 1.4373 territory for a while now, last week, but we struggled to overcome it, or sorry, we're struggling to stay above it. Now that of course is a bit of a bearish indication. Everybody's hoping for that, maybe a little correction here to the downside, and to be honest, I think that would be quite healthy. Maybe to go somewhere towards this little area here, the 1.4233, and also test the upside line. But look, if we continue to trade here, if we continue to hold above this upside line, still the upside scenario is not off the table. It could still go back up, but hey, look, at the moment I am just keeping an eye on this 1.4373. If we pop again above it, I'll go higher. Especially if we stay above it, I'll go higher. Euro NZD. So this one, I talked a lot about this one. I mean, look at this. I mean, it's a beauty. It's still trading within this falling channel with a slight little hiccup here, but it's okay. It's fine. But look, I mean, we're still within this falling channel, so there is still potential for the upside. And yeah, if we clear this downside line, or should I say the upper side of the falling channel, then I'll go higher. If we here, and actually this is where the moment is an interesting moment, if we fall below this little hurdle here, the 1.6415, we already did that on Friday, but if we once again fall below it, I will consider a move towards the lower side of the falling channel. Simple as that. And finally, EURUSD. So still, look at this fantastic move here on Friday to the upside, testing the upper side of this rising channel, and then drifting back to the downside. So, in other words, look, it could continue moving, sideways here inside the channel here, but still the short-term trend is to the upside. So, in other words, it could drift lower, test the 200-day EMA maybe, and if it struggles to go lower, then it could rebound and push back to the upside. So at the moment we're having quite an interesting rising channel. So let's see if we can continue, aiming to the upside overall. But from the shorter term perspective, the way you could, play it out here, let's say, look, 1.0595, this is the level that I'm watching for the upside. If we clear that, I will go higher, but we might kind of end up maybe testing the upper side of the this rising channel. However, again, depends a lot. If the buying is so strong that it's going to pierce through this, then well, ignore the whole rising channel pattern, and we could go further north. But for the downside, from the shorter term perspective, let's say if you're as I said before, we are still within this rising channel. So overall in the short run, it's like kind of to the upside. However, I don't know if I can say this shorter term, then a drop below Friday's low, 1.0503, something like that, or in general below the 1.05 territory. If we fall below it, I'll aim for the 200-day EMA, or even this lower side of the rising channel. So guys, that's it for this session. I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything, guys. I really appreciate that. So if you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, have a beautiful trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.